Hey everyone, welcome back to Corporate Decoder. Today, Applied Optoelectronics Alloy just filed an 8K announcing an important shareholder vote on a new equity incentive plan, and I am seeing a key detail that hints at future employee compensation shifts. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just got approval for a brand new stock incentive plan, and this has implications for how they'll reward their team moving forward. Alright, let's dive into this recent filing from Applied Optoelectronics Incorporated, a company in the communication equipment space. This filing is a Form 8K, which is basically a report of major events that shareholders should know about. The big news here is that on the 4th of June 2026, shareholders approved the Applied Optoelectronics Incorporated 2026 Equity Incentive Plan. This new plan officially kicked off right after their annual shareholder meeting. What is really interesting is that this 2026 plan is going to replace their older incentive plans from 2021 and 2013. This means no new awards will be handed out under those older plans. Companies do this to streamline their compensation structures and sometimes to refresh the terms of how they award stock options or restricted stock to their employees and executives. Now, for some numbers, this new plan allows the company to issue an additional 2.5 million shares of common stock, but it is not just those new shares. Any shares that were set aside for those older plans but haven't been used yet will also get rolled into this new 2026 plan. This is a pretty common move to ensure they have enough equity to grant to employees as incentives. The plan will be managed by the board of directors or a special committee. Think of them as the gatekeepers for who gets what and when. They can also pass some of this responsibility down to other board members or even company officers. Their job will be to decide who gets awards, what kind of awards they get, how many shares are involved, and all the other specific conditions. And who can receive these awards? Pretty much anyone who works for or with the company. This includes employees, executives, directors, consultants, and even advisors. They can grant all sorts of things like stock awards, restricted stock, stock options, and even cash-based awards. This really shows how broad the incentive scope is. Now let's look at the actual shareholder vote on this plan back at the annual meeting. We have the results for several proposals here. First up, the election of directors. Chi-Wei Lin and Robert Flanagan were up for election. Chi-Wei Lin got 35.6 million for votes and Robert Flanagan got 37.9 million. For votes seem to have been re-elected. Proposal 2 was to approve PricewaterhouseCoopers LLP as their auditor for 2026. This almost always passes with a huge majority, and it did here with over 51.2 million for votes. Then there was the advisory vote on executive compensation, the famous say, on pay. This one got 38 million for votes. It is an advisory vote, meaning shareholders recommend, but the board makes the final decision. Proposal 4 was about amending their corporate charter to clarify voting standards for future changes. This passed with 38.4 million for votes. And finally, Proposal 5, the main event we talked about earlier, approving the 2026 Equity Incentive Plan. This passed with 34.8 million for votes, so shareholders gave the green light for this new compensation program. There was also a proposal to approve adjourning the meeting if needed, which also passed easily. The filing also lists out the exhibits. Most importantly, Exhibit 10.1 is the actual Applied Optoelectronics Incorporated 2026 Equity Incentive Plan document itself. Now for the bigger picture, Applied Optoelectronics Incorporated is in the technology and communication equipment sector. They have a pretty substantial market cap of around $15.9 billion, and their stock price has seen some significant movement recently. There have been headlines about the stock surging due to ETF activity and insider moves. This new incentive plan is being put in place at a time when the company's stock is already generating a lot of buzz from a shareholder perspective. When a company authorizes more shares for incentive plans, it can lead to dilution. That means your ownership percentage in the company can decrease if you don't buy more shares. However, this is a standard practice for tech companies to attract and retain top talent, especially in a competitive market. This new plan, by replacing the older ones, suggests the company is looking to modernize its approach to employee rewards. Looking at the voting numbers, the approval of the new incentive plan passed, but it wasn't an overwhelming landslide compared to some other proposals. It received about 34.8 million for votes out of a total of over 51 million shares represented at the meeting. This means around 16.5 million shares voted against or abstained from this specific proposal. While it passed, this level of opposition or abstention on a compensatory plan might be something to keep an eye on for future compensation discussions. My take on this is that the company is making a strategic move to update its compensation structure. The fact that the shareholders approved the plan shows they likely trust management's ability to use these new shares effectively to incentivize growth. The key will be how these incentives are distributed and whether they translate into tangible performance improvements for the company. We have seen other tech companies use similar plans to fuel innovation and expansion. When a company like Amazon expands its workforce significantly, it often uses stock grants to align employee incentives with long-term shareholder value. The risk here is always dilution. If the company isn't growing fast enough to offset the new shares hitting the market, it can put downward pressure on the stock price. On the flip side, if these incentives truly motivate key employees to drive innovation and sales, then the growth could easily outweigh the dilution effect. What I'm actually looking for is how this new plan will impact employee retention and their ability to attract top engineering talent. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.